for joining us today. I'm Crystal Ahart, Co-Executive Director of Arizona Consumer Bankruptcy Council, along with Diane Drain, who is with us today as well. Arizona Consumer Bankruptcy Council is commonly known in our local bankruptcy community as ACBC, if you're not already familiar. ACBC is a group of over 100 Arizona attorneys whose bankruptcy practice is focused on consumer debtors. We're a very collaborative group, and we strive to, as our mission states, enhance the legal profession by promoting competency, ethics, and professionalism of members, and also improve the administration of and access to justice. ACBC hosts numerous CLEs throughout the year, many of which are for members only, but this one is open to non-members, and we're happy to have all of you here with us today. ACBC also hosts a weekly think tank where numerous members come and come with questions and answers and stories and war stories and anything that they can come to share. And just, again, a very collaborative environment. We usually spend an hour or two together each Thursday afternoon. So if you are an Arizona attorney with a bankruptcy practice focused on consumer debtors, then we encourage you to join our ranks. We also do often 2 times a year, a happy hour, which are gratefully now back in person. And we do also open those to non-members. So even if you don't fit the profile of membership, we encourage you to continue to attend events like this that are open to non-members. We're grateful to have Ken Neeley and Lisa Thompson here with us to talk about student debt relief and the new and upcoming information that we all need to know so much for perhaps ourselves, but also for all of our clients. Ken and Lisa will monitor the chat for questions, and to the extent they can, they'll work those questions into their presentation, but we will save a bit of time at the end for Q&A. This session is being recorded, as they always are, so we do ask that you keep your microphones muted to avoid any background noise for the recording, which will be available at a later date, and we'll send out notification of that. So if you have questions during the presentation, again, we encourage you to use that chat box to place the questions in there, and we'll try to monitor that. That chat box also contains the materials for today. They're also available on the ACBC website, but they have been placed and will again be placed here in the chat box on Zoom, so you can grab them from there. And just one more thing, the CLE certificate will be posted to this Zoom chat box towards the end of today's session. So we encourage you to grab that CLE certificate when it is posted in the chat here on Zoom. It will not be posted to the website later. If you can't see the PDFs in the Zoom chat box for any reason, if you type your email address in there and we'll send them to you, or send us an email at admin@acbcforum.org. And with that, I'll turn it over to Ken and Lisa.
So good afternoon, everyone. My name is Lisa Thompson. I am a consumer bankruptcy attorney and a business law attorney here in Tucson, Arizona. I do a lot of student loan work. So that is, thank you, Ken. You can go to you. I am honored to present today with Ken Neeley, who is my friend and colleague, who also is a consumer bankruptcy attorney who focuses a lot on dischargeability issues of both federal and private student loans. And he's up in the Phoenix area. And we are super excited about chatting with you today. One of the things that both Ken and I feel like is that a lot of people just don't know what it is that they need to be doing right now. And some people don't even know about some of the new programs and things that came out with the Biden-Harris student debt relief plan, which is a mouthful. And so we're very interested in letting folks know so that they don't miss out on this relief, because we've been waiting for it. Now we have it, so let's not miss it. And there are certainly some very tight deadlines, and we're going to try to give you like a high level view of everything. Most certainly there are some quirks and some more specific things for, you know, your financial situation. And I'm just going to say you as though you're the one with student loans, but I mean friends, families, colleagues, Ken's hairdresser, and, you know, just this affects anyone that has a student loan. And we just, again, don't want to be the people that have to say in January, like, well, you missed the boat. So that's our goal today. We are going to be talking about federal student loans unless we specifically say private student loans. So if I'm just talking about student loans, it's, you know, sometimes I'll say federal and sometimes I won't. But if I do not say private or Ken does not say private, we are talking about federal student loans. Again, we are recording this, so if you miss something, or you're like, gosh, I wish I would have told this other person or they could have attended, it's going to be posted. It'll be posted on my website, Ken's website, and the ACBC website. Let me just make sure I got all of my housekeeping questions. We're more than happy to answer them. If it's specific to what we're talking about and someone doesn't understand something, we'll do it in the presentation. Otherwise, we'll catch it at the end, and we will let you go at 1 o'clock. So you don't have to feel bad about leaving, but we will stay on and answer questions if there are more that exceed our time. All right, so one of the things that we did want to mention, there's two things that aren't in our slides, so I'm just going to mention them now so we don't forget them. There is a bill right now out there for spousal consolidation loans, and it has now gone to President Biden for signature as of today. It was just on our listserv. And what that means is if you have consolidated your loans with your spouse, you're going to be able to separate them out, and you're going to be able to get some of the relief that is being offered through the new plan. Whereas right now, there's not a lot of things that are available to anyone that has spousal consolidation loans. So pay attention to that. One of the things that we're saying to everyone is if you do have a spousal consolidation loan and you just thought you were out of luck, get ready to be in luck, because there's no reason to think that President Biden isn't going to sign this. And so get your applications ready to do what you need to do, because that's happening, and it's happening soon. So that's super exciting. The other thing that we didn't put in the slides that I just wanted to mention is you are able to, if you have been on the COVID forbearance from the CARES Act, you made student loan payments during the pandemic while you were on forbearance, you are eligible to get a refund for those. And that matters because if you owe $9,000 and you paid $1,000, and you're going to be eligible to get $10,000 forgiveness, get that money back. We're all struggling. So you are eligible to get refunds. You just need to call your servicer and tell them that that's what you want. You are absolutely entitled to that. Ken was saying today that some of the forums that he's been watching, folks are saying, yes, they're getting them, but it's hard to get to the servicers just because everybody's, moving on this and starting to start doing the things that they need to do. So, if you want refunds for money that was paid that didn't need to be paid, you are welcome to do that. So let's get into it. I wanted to talk about, a couple definitions that we use all the time that I think are misunderstood. National Student Loan Data System, the NSLDS report is what it's called, shows all of your federal student loans. If you go to studentaid.gov and you get your ID and you log in and it doesn't give you any loans, you don't have any federal student loans. If you have loans there and you thought they were private and they show up on your NSLDS report, they are federal student loans. So this gives all of your loans for all time. This is also going to tell you if you ever got a Pell Grant. So if you can't remember, this is what you need to do. The other thing is you need to go to studentaid.gov regardless. I think everyone right now needs to look at what they have as far as student loans go and make sure they know the type of student loan they have, what they're exactly eligible for, and make sure that they're on the best repayment program and all of that good stuff. But at minimum, you need to go to studentaid.gov and make sure that your information is updated, like you have an updated email address, updated address, because how are you going to get the relief if they don't have good information? So you absolutely want to make sure that you have updated your studentaid.gov or your FSA account to make sure that your information is correct. The other thing that we talk about a lot is consolidation, or to consolidate a loan. And what that means is not taking one thing and another thing and making it into one and consolidating it. It means recharacterizing the loan. So you can have one loan and it needs to not be a FEAL loan, and you can consolidate that and make it into a direct loan. So here's my piece of advice today. If you have a FEAL loan, don't have a FEAL loan anymore. Like, anything with an F on it and your student loans is bad. F is bad. You do not want to have a FEAL loan. You're not eligible for anything that is coming down the pike. With a FEAL loan, you need to consolidate that to a direct loan. The application for consolidation is in your packet, is within our materials. And you need to do that, and then you will become eligible for things. So when we talk about consolidation, you can either put all your loans into one, you can put one, you can change the characterization of one loan if you need to. Sometimes there's reasons not to consolidate all of your loans. So I would ask that you talk to a student loan lawyer. There's a bunch out there that you can find. You can talk to me, you can talk to Ken. Because sometimes there's reasons not to consolidate all of your loans. So you just really want to have a strategy for what's going on. Next slide, Ken. All right, so what's in the plan? So this is the final extension of the COVID forbearance that came from the CARES Act. It's not going to be extended again. This is it. This is your plan. This is what everybody was waiting for. If you've been waiting to do something because you wanted to know what the Biden administration was going to do, don't wait anymore. This is it. And not only that, there's timing issues that are coming down pretty quickly. So and again, get the word out to folks so that they know. There's about 45 million people that, I'm sorry, I'm jumping ahead of myself. Thank you, Ken. All right, so there's about 45 million folks that are eligible for the $10,000 or $20,000 for forgiveness. But only 8 million are going to get it automatically. So you need to find out if you're going to get it automatically or not. So again, you need to go to studentaid.gov, check your student loans, and if the Department of Education is the first thing you see on your student loan, that loan is eligible. It needs to be held by the Department of Education. If it's still a federal loan and it's not a FEAL loan, then you can still get the $10,000 or $20,000 forgiveness, but you're going to have to apply for it. And you can apply throughout this coming year. The application's not out yet. It's supposed to come out at the beginning of October. If you want to be sure that you don't miss it, then I would recommend getting on the Department of Education website and subscribing to their updates, and you'll get it then. And then you can apply for that, and you will get the $10,000 to $20,000 forgiveness, depending on where you fall within that category. So you just have to take one extra step. Now, you can do this all the way to the end of December of 2023. However, you're going to have to start making payments in January 1 of 2023. So you really want to get your application in so you can get your forgiveness as soon as possible, so you can get the lowest payment that you possibly can. Or if your loans are going to get forgiven, get them forgiven, because you don't want to get a holiday surprise, like get the letter like Merry Christmas, Happy Hanukkah, Happy Kwanzaa, whatever you celebrate, that here's the love note from your servicer. This is what your plan payment is. So you want to definitely check that. The criteria for getting the $10,000 is, do you have a loan that's held by the Department of Education, or do you have a federal loan? If you had a Pell Grant at any time in the history of your, since you had student loans, then you get $20,000. So it's whether you had a Pell Grant or not, you will get either $10,000 or $20,000. And that's if you're single and you have a household that made $125,000 or less, or if you were married and your household or head of household and you made $250,000 or less, then you're eligible for this forgiveness. All right, going on. Next slide, please. Or not. Okay. There's also going to be a new income-driven repayment program. It has to go through negotiated rulemaking, so we don't really know a whole lot about it right at the second. And we probably won't see anything on it until July of 2023. What we do know is that it's going to only It's going to reduce the formulas that they use to calculate what you have to pay on your income-driven repayment program to 5%, whereas the programs right now are 10 to 15, I'm sorry, 15 to 20%. They're also going to use the poverty index. They're going to calculate it at 225%, which is great, because right now they're using 100 to 150% based on what program you're on. So there's going to be a new IDR program coming out. We don't know. It's only going to be for undergrads. So if you have a mix of student loans, that's great. It's going to help you. If you only have undergrads, that's going to help you as well. So you're going to want to look for that sometime in 2023. And it's also going to have a forgiveness change of 10 years, and it's not going to be public student loan forgiveness. Next slide, please. All right. So the other thing that's in the plan is this fresh start program for defaulted borrowers. And this starts January 1, 2023. So basically, if you've been out in the cold, they want you to come in, and they're going to allow you to call up your servicer and say, hey, I was out in the cold. Now I want to come in. No rehabilitation, no administrative wage garnishment, none of that stuff. They will start you fresh and get you onto a program starting in January of 2023. And all it takes is making a phone call. So, but you're going to miss all of this other forgiveness and the neat things that are happening right now with the Biden-Harris plan. So you might want to look at getting out of default at this particular moment, because again, there's no payments that are due until the end of December. So we did put the program information in your materials. So if you're interested in that, take a look. But again, we're advising everyone to get out of default now. And it's only going to be for 1 year. So January 1, 2023 to December 31st, 2023. Okay, next slide, please. All right, so this is the big one. This is the PSLF reconsideration. The deadline is October 31st, 2022. That's this Halloween. If you have worked for the government, whether you were a janitor, admin, attorney, whatever, if you've worked for the government, you've been active duty military, you have worked for a charitable organization as a W-2 employee, not a 1099 contractor, and you have not had your payments counted toward public student loan forgiveness, now is the time to fill out that application and get it in. And it doesn't matter if you're working there now, because what they're going to do is they're going to take all of your payments, and they are going that were not counted towards public student loan forgiveness, and they are going to now apply them to public student loan forgiveness. And so all you need is 120 payments while you were working for an eligible employer. Now, don't wait until the last second to do this. We've included the application in your materials. You can send it by mail, but you need to do it for every single employer. So even if you worked for the public defender's office for a while and now you're in private practice, you don't know what happens in the future. Get those payments certified for public student loan forgiveness, and you have to get your employer to sign off. So there's not going to be any of this unless you're like really tight with your employer. Can't wait until October 31st. So definitely get the word out. I was talking to someone in the military, and they were like, what? I qualify for public student loan forgiveness, and his loans are going to get wiped out. He just had no idea. So let people know. And he owes like 70 grand too, but he's been paying on them forever and ever and ever. So, all right, next slide, please. And it's a separate application for each employer. So if you've worked multiple places, you need to do it for each employer. Okay, this is what I think is the most sexy thing, and it's not part of the student debt plan that just came out. This came out in April, and everybody missed it, including myself. They are going to do, the Department of Education is going to do a one-time audit of all borrowers' accounts. And this is, one of my clients says it's already happened to him. My understanding, and from what I've heard, is it's happening in October. And it's supposed to end in December of this year. So again, if you're going to do anything, now is the time. Don't be the cobbler's kids have no shoes. Get those kids some shoes right now. So what they're going to do with this is they are going to, a bunch of servicers have left the servicing space, or they were asked, maybe not very politely, to leave the servicing space. And so they're no longer going to be servicers. And everybody agrees that the student loan accounting system and the servicing has been, how do I say it diplomatically, messed up forever. So to fix this, they're going to go back and they're just going to say, all right, everybody, wherever you are at right now, we're going to apply all of your payments to that. So if you are on a program that has a 20-year forgiveness, but you didn't know about that until like 3 years ago, but you've been making payments for 17 years, you're going to get those credited to your new program. So this is a big, big, big deal. And I think it's hard to explain, so people don't really know about it. So even, like getting $10,000 or $20,000 is great. That's going to lower, what people are going to have to pay on their student loans. And some people are going to get them completely forgiven. But ultimately, we really need to get all of these payments and everybody on to some kind of program that has forgiveness, and all of the income-driven repayment programs do. And you're going to get credit for everything where you weren't on the correct program with this audit. The problem is we don't know how they're doing it. We don't know if they're going from A to Z, if they're doing it by servicer. All we know is it's happening now. And it's supposed to be done by December 31st, which I kind of find funny. The other reason why you want to do stuff now is, I told you there's 45 million borrowers. Like, the system's going to get overloaded, and it takes about 60 days to get a consolidation done. I think that those timeframes are going to be extended. I think it only matters that you have your application in, but you're still going to have to make payments starting in January. So if you don't already have your consolidation in, if you're not already getting onto an income-driven repayment program, you're going to be making whatever payment it is that your servicer had you at prior to the pandemic. And here's the other thing. If prior to the pandemic, your income was here and now it's here, you need to go in and ask them to recalculate your income, which is the same form as requesting an income-driven repayment program. So that form's included in your materials. So if your income's less and you were already in a repayment program, send the form in so you don't have that higher payment when your income was higher. Okay, next slide.
Lisa, actually, let me just jump in, because now—
Oh, I'm sorry.
No, now's probably an appropriate time to answer a couple questions. So
okay,
I've been able to answer a lot of them in the chat, but there are a few that I'll just open up to you because I didn't have answers. So one question, I think it was asked by Carolyn, was how will the $10,000 or $20,000 be applied to the loan? Will it be applied to principal or interest? Do we know? I haven't seen it.
Don't know. Yeah, and in fact, Josh Cohen was saying, like, we don't really know. That's one of the things that hasn't come out yet.
Okay.
This just came out April 24th.
Yeah.
So, and even what Ken and I learned like a week ago is different than what we've learned now. So yeah, we don't know.
More information is constantly coming out, and so go to that ed.gov/subscriptions. Click the checkbox at the very top and the checkbox at the very bottom, fill in your email address and submit that. And then as updates come out, you will receive those directly to your email. Another question.
And just to tag on to that, if you guys are getting information on this, talk to a professional that knows, but also the National Consumer Law Center organization is excellent, nclc.org. They are really good at putting out information for consumers, like that's not in legalese. So I always read that.
Perfect. Tanetta asked if she can apply for the PSLF if she's no longer living in that state. I'm guessing PSLF is not affected by where you're living. It's whether you work there. You're going to have to get your employer to sign off though. So start on that. Yeah, so I don't think it matters that you moved as long as you can contact that employer. Kelly asked if payments on the PSLF count when she was in a bankruptcy.
If she was making
Good
payments,
question.
then I believe they do.
They should here, Kelly, they should. I know that in the past they've given borrowers a hard time and said, we can't count those because, you know, the automatic stay prevents us from counting those, which is kind of a silly thing to say. It's not really true, but they really should. And if it makes a big difference, in other words, particularly if it was maybe like during a chapter 13 where it was a long period of time, it would, I think, make sense to apply to have those counted and see if you can get that done.
I would absolutely, my position on this is apply. If you don't apply, you're going to miss it. If you apply and they reject it, then you at least have an argument, and you have something to do. But if you do something in a year, you're out of luck. They're not going to do anything. So definitely apply. And then if they don't, give you what you think you deserve, then you can certainly have a discussion with them. They're even saying for some things to go to the Department of Education Ombudsman. So that would be a place to go as well. But it seems to me, and Ken, tell me if you disagree, that they're being very forgiving now. Like they're trying to fix it. So if there was ever a time, and Ken's going to talk about some of the bankruptcy guidance. And so I think that things might be made a little clearer when we get some guidance on bankruptcy, which Ken's going to talk about.
Yeah, absolutely. Okay, a couple more quick ones here. I haven't seen guidance on this either, but maybe you've seen something. If the Pell Grant was received as an undergrad, but the only remaining loans are now graduate loans, will the $20,000 forgiveness?
It is. Did you ever in the history of your life get a Pell Grant?
Okay.
Got one in 1973, $20,000.
So that's good news, Christine. That's answer your question. It should be 20,000. And then Carolyn asked about taxation on the forgiveness. There will not be taxes. There will not be federal taxes on the forgiveness. Right. Some states might. I don't know if we know exactly how Arizona might treat it. What we might see some states do is pass some legislation in the coming, early in 2023. I don't know. So well, I don't know how Arizona will treat it. Unfortunately, have a specific answer to that question.
I haven't heard. Arizona is not definitive on it. Indiana is taxing it, which sucks. California is talking about taxing it. So that's really a state by state question. Yeah. But as Ken said, the federal stuff, it's not going to matter. But if you live in Indiana, you're out of luck. And I believe that California is as well, which shocked me. Yeah. So if you just Google like state taxation of student loan forgiveness, it'll give you a list. Arizona was not on the list of people who were of states that were thinking about it. But then again, who knows? So go ahead, Ken.
Salam just posted a link that says Arizona is not intending to tax it. So that's good news.
Thank you.
Yeah, so thank you. All right, go ahead, Lisa, to your next. You want me to go to the next slide?
Yes, please. Yeah. And then I'm done. And I want you to note that it's 12:30 spot on.
Wow, well done.
Anyway, so scam alert. And I think that, aside from getting notice to everyone, make sure that, the Department of Education, your servicers, they are overwhelmed right now. They are going to get more overwhelmed. They're not going to call you and be like, hey, have you thought about this deadline? You really should do something about that. They're not going to do that. And prior to this new plan, there were a lot of scammers that were calling out and saying, hey, there are new programs. And I would always tell my clients, there are no new programs. Like there are no new programs. They're not calling you, right? Okay, well, now there are new programs. Nobody's calling unsolicited. It seems to me that servicers are very much not even calling at all. They're really about email. But definitely make sure that, you don't click on links from email, go directly to your servicer, because I think that this is a prime opportunity for scam artists, or you're going to get something that, looks like you should do something. Just be super careful. And the Department of Education is, out there saying, we're never going to ask for your FSA number. We're never going to ask for you for these things from you. So just be super, super careful. You also don't need to, all of these applications you can fill out online. Even if you do your PSLF application online, you still have to get your employer to sign it. It just makes it prettier than if you handwrite it. So you can do all of these things online. That's fine. You don't need to hire anyone to do them for you. You are capable of doing it. Where you sometimes need to talk to someone is, what is your financial situation and what kind of tax strategy should you have? What things can you do to lower your monthly payment, and what payment plan should you be on? But as far as doing it, if you know what you need to do, you can do it yourself. So just be really careful, get the word out, because I don't want to hear people getting scammed on this. I just want them to get the relief that they need, never have to hear about an administrative wage garnishment again, and let everyone keep their tax refunds because they're current on their student loans. All right, Ken.
Thanks, Lisa.
I'll watch the chat now.
Yeah, awesome stuff. All right, so before I jump into my piece, I just want to reiterate that there are a lot of people out there with federally guaranteed student loans. So they are federal loans, but they will not get the forgiveness if they don't take action. If they go to their studentaid.gov account and it is a loan, it's a FFEL loan, does not qualify. It needs to look like what I just posted in the chat. US DEPT of ED / and then a servicer name. It'll be /Navient / Fed Loans / Mohila / whatever, right? But if it doesn't start with US DEP of ED, then action must be taken. And there are lots of people out there that say, well, I have federal loans, I'm going to get the $10,000. I even got a Pell Grant along with my FFEL. I'm going to get $20,000. Unfortunately, not going to get any forgiveness unless they consolidate over to so that the loan is held by the Department of Education. So I just don't think that's being emphasized enough in the media and in the announcements and all the information going out about these. People just lump all federal loans together, but they're not all exactly the same. The only ones that will qualify are the ones held by the Department of Education. All right, so now let's jump into some other things that are going on. So borrower defense to repayment is another way that people can get their student loans canceled, discharged, and beyond, well beyond the $10,000 or $20,000, right? It could be hundreds of thousands of dollars discharged under the borrower defense to repayment. And these used to be futile. Okay, so 3 or 4 years ago, if you filed a borrower defense to repayment, it just went off into a black hole and you never heard anything. And that actually happened to 200,000 people. 200,000 of these applications built up over many years and were completely ignored by the Department of Education. And then a big class action lawsuit was brought on that. And also we had a change in administration, and the new administration and the new Secretary of Education said, we're going to review this borrower defense program and why it hasn't really resulted in any discharges. And so several things have happened that are actually very helpful to a lot of students, especially students that went to schools where maybe the quality of education and or the promises that were made about the education were maybe not totally forthright. The schools weren't being totally forthright. So there are some students that are going to get automatic forgiveness, okay? And well, there's a few schools that qualify there. There are some students from certain schools where forgiveness, where these facts of misrepresentation are going to be presumed true. And as long as the borrower just says, hey, that happened to me too, that will be presumed true, they will get a discharge. And then there are some where facts and circumstances and allegations still need to be made in that application. But as Lisa mentioned, we anticipate, at least as long as, at least for the next 2 years or so, while this administration and this Secretary of Education is in place, that those will have some success, those applications. So, and if those are approved, they will lead to, thanks, Diane, or whoever muted. All right, so those will lead to a complete discharge when approved. Okay, it used to be under Secretary DeVos. First of all, none were really even being considered, but the guidelines were if they were considered and or approved, that it would be some like partial discharge based on, you know, calculating income minus income if you wouldn't have gone to that school. This very complicated formula that really didn't make any sense and was kind of just really meaningless anyway, because none were being approved. So these are the automatic discharges: the Corinthian colleges, ITT Tech, Westwood College, and Marinello Schools of Beauty. Okay, so anyone that went to those schools, they don't even have to do anything. They got federal loans. The Department of Education knows that this was the school that received the money, and those I believe they're already receiving notifications that their student loans are gone. If not, it's happening imminently. Also, some people that had pending borrower discharge applications against a long list of schools. If they were pending on June 22nd, so they had filed a borrower defense application prior to June 22nd, and they went to one of these schools, there's several hundred. You can find them by Googling Sweet v. Cardona list of schools. I think there's like 300 or something, a lot of schools, including some big ones around here. University of Phoenix is on that list. Then they will receive an automatic discharge based on a settlement in this large class action lawsuit. That settlement is expected to be finalized on November 3rd. And so there's a period from June 22nd to November 3rd where there's an elevated level of rights, but not an automatic discharge, but an elevated level of rights, primarily an expedited review of the borrower discharge application. Okay, so it's still worthwhile if you know someone who went to one of those schools. I should have included a list in the materials. I apologize. I'm realizing now that would have been a really good thing to include. But again, Sweet v. Cardona list of schools. It'll be the top 1 or 2 results in Google. If you know someone who went to one of those schools, it's still worth filing the BDR because by November 3rd, because it'll mean expedited review. Okay. Now, even totally missing November 3rd, there are, actually, so let me take a step back real quick. A quick list of presumptive schools. So these are schools where the Department of Education will just trust the facts that you put in the application. Okay. So DeVry, Minnesota School of Business, Court Reporting Institute. But now I want to talk about, well, what about alleging facts? If a school is on that list, okay, the Sweet v. Cardona list, or it's not on any list at all, but you believe that you can demonstrate that misrepresentations were made by the school, specifically around things like salaries after you leave, acceptance rates, quality of the student at the school, certain educational benefits you'd receive at the school, like qualities of networking connections the school would be able to provide for you. The best things are where it's specific statistics that can be disproven, right? Because then it's very objective. They told me 93% employment rate after school. Turns out when someone looked into it, it was 33% employment rate after school, right? Those types of facts are huge. And then you've got to be able to demonstrate some monetary harm. So even schools that aren't on the list, if you can demonstrate these facts, the borrower defense to repayment is a good process to go above that $10,000 or $20,000. Okay, so it's something that we used to not even think about. As student loan lawyers, someone would say, I want to do a BDR. We'd say, we don't do those, right? And so a lot of attorneys still don't do them. But now they make a lot more sense because now it does look like there are real prospects of forgiveness. Okay, so look at that list of schools, because those are going to be ones where there's more of a benefit of the doubt, because those schools are all part of this lawsuit. The FTC and the settlements and all those things. But if even for schools not on that list, if there was some misrepresentation, it's important to still look at your options. Okay, now this is really where my passion lies, is in bankruptcy options for student loans. Okay, so for someone out there who has $200,000 of federal student loans, the $10,000 forgiveness is not going to make a significant impact on the student loan balance. So that borrower still needs to consider other options. And if the borrower defense to repayment that I just discussed also isn't a great option because the school didn't make any misrepresentations or nothing substantial, or there was no monetary harm, then what else can be done, especially in regards to a federal loan? What else can be done? Well, we're hoping right? We're all of us who do this work are just like on the edge of our seat waiting for some guidance from the Department of Education on discharge lawsuits in bankruptcy. Okay, they're called adversary proceedings. If you file an adversary proceeding right now, today, last year, 2 years ago, 5 years ago, you got the full force of the federal government to defend against any discharge. I'm talking, no exaggeration, they would spend $100,000 in legal fees on very, very high-end attorneys to prevent discharge of a $20,000 student loan. It was not even a question of, is there a, return on this investment for us? That wasn't the question they were asking. The question they were asking was, how do we discourage and deter anybody from trying to discharge their federal student loans? That was the mindset years ago. Really always, actually, up until just the last couple years. Towards the very end of the Trump administration and then now into the Biden administration, there's a lot more recognition of the problem that student loans are, and why, when someone goes into a bankruptcy and has taken that drastic step to deal with debt and clearly has some hardship, are we fighting tooth and nail and spending all this money and putting all this effort to preventing it from being discharged? And so we're hoping that the Department of Education, and in your materials is a letter from Elizabeth Warren to Miguel Cardona saying, Secretary Cardona, you've been promising this guidance on student loan discharge and bankruptcy for a while. Where is it? We need it. And the letter is very interesting. What's even more interesting is that there's not anything in your materials on this, but the spokesperson for the Department of Education did release a statement responding to that letter that's in your material saying, we are working on it. It is our top priority right now. All the highest level people at the Department of Education are working on it. So that's encouraging. Now, we don't know what that's going to look like, right? But what I hope it looks like is that there will be some very objective criteria that say, hey, a certain income level, we won't fight a discharge. You pass this certain means test where we create these, these formulas, we don't object to discharge, something like that. I would love it if it just said, if you qualify for Chapter 7 because you're able to pass the Chapter 7 means test. That's a pretty good means test. It's been around now for 17 years, something like that. And it's been tested, and you may love it, you may hate it, but it's been around for a while. People know how to use it. Why not just say, if you pass the Chapter 7 means test, you can discharge your student loans? I would love that. That would be a big cohort of people that could then seek to discharge their federal student loans. It will probably be more restrictive than that, but we're hoping at least for objective criteria that we can measure and apply to someone and know in advance that the Department of Education will not fight your discharge. We can concede, we can stipulate they'll concede a discharge. Right now, we have probably 30 lawsuits against the Department of Education, adversary proceedings, and they continue, the attorneys for the Department of Education continue to just ask for stays on the litigation because they also are hoping and expecting guidance, and they just don't know how to fight these lawsuits right now because their client is telling them, wait, right? Wait, we don't know, wait. So some of them have been stayed as long as over 90 days now. Wow, we're just kind of in this limbo waiting. Okay, so now let's say it stays exactly, let's say the guidance is, we're just going to kind of do what we've always done. I don't expect that'll be the case, but it could be. Well, guess what? We still have had a lot of success discharging federal student loans in bankruptcy. So it's the myth that bankruptcy can't do anything with student loans. Bankruptcy can't help you. These are just non-dischargeable. They're untouchable unless you have such hardship, that, you can't even like put food on the table type of hardship. You have some disability, you have all these, you can't work, all these things that, were built into this myth around undue hardship. They're really not true from a practical standpoint. If you file an adversary proceeding and you pursue it seriously and firmly, you get settlements, you get at least partial discharges, frequently total discharges of student loan debt. So it's awesome. It's been it's been a great thing for our clients and people that have come to us. We're now doing this across the country. We're filing these adversary proceedings, and it's amazing. So, and yes, David, you can reopen old cases for absolutely, for sure. The only requirement is that the student loan existed when the bankruptcy was filed, right? So obviously you can't go reopen a case from 2007 and discharge a loan that someone got in 2012. But if they got the loan in 2007 and they filed bankruptcy in 2012, then even right now, 10 years later, you can reopen that case, file an adversary proceeding, and seek a discharge. All right, so private loans. Now, this is about the only part of the presentation that talks about private loans. As Lisa said, most of it was on federal loans. But private loans are actually the best situation to be in right now, because even with all these changes to federal loans and some forgiveness here and some improved standards on the PSLF and the BDRs and prospective, better income-driven repayment programs, lots of great administrative remedies for federal loans. But I will tell you that for anyone that's serious about settling or discharging a private loan in bankruptcy, the success rate approaches 100%, right? I would say 100% if I could get away with it under the rules of professional responsibility. But it approaches 100%. These loans are very frequently not even qualified student loans under 523A8, which is the section of the bankruptcy code that protects student loans. Very frequently, they're not even really, quote, student loans per the bankruptcy code. In other words, they're pretending, they're engaged in this kind of sham representation that we weren't discharged in bankruptcy, when they know full well they were discharged, but they're relying on the ignorance of the bankruptcy filer, the bankruptcy debtor, to continue to pay them even though they've been discharged. And they know this. This is a scheme. It's horrendous, right? In my opinion, like, if I was more, I don't know. I mean, if I was more ambitious, I would try to figure out a way, I think, to do some kind of a class action against non-qualified student loan lenders that continue the sham of pretending to be non-discharged student loans. So a lot of times we file those suits in the bankruptcy. We say, you're not even a student loan. And guess what? They don't even respond. They just let us win by default. We get the judgment that says that the debt is dischargeable, was discharged in the bankruptcy. A lot of times the loans were far more than the cost of attendance, which means a large chunk of the loans don't qualify for protection. And a lot of times, even if bankruptcy isn't a great option, so we have people come to us and they say, I would consider bankruptcy, even though my only debt is student loans, but I would consider bankruptcy if you feel like my student loans are good candidates to be discharged in bankruptcy. And we look at these, their loans are only private loans. A lot of the different lenders and or servicers of private loans we've worked with now enough that we know that this is just a great candidate for a settlement. Don't just stop paying if you haven't already, if you're not already in default, stop paying. As you start to get into default, we reach out, we negotiate a deal. We're getting fantastic deals on private student loans right now. So I would say of all, especially right now with still some uncertainty around what the Department of Education is going to do on student loan discharge. Right now, private loans, best types of loans to have to try to deal with through a bankruptcy. It's just the success rate is so high, and often, even if it turns into negotiations, the settlements that are being offered are just no-brainer type settlements. 10%, 20% of the balance, going from 8% or 9% interest to 0% interest. These types of settlements are very, very common, even without being able to prove true, what you might call undue hardship under the Bruner standard or under other circuits standards for discharge of undue hardship. So even without that, here's one of the main reasons why, right? It makes perfect sense. These lenders do have to worry about return on investment, unlike the federal government. If they have a $20,000 student loan owed to them and this borrower files an adversary proceeding and they go to a law firm and they say, will you fight this? And the law firm says, yeah, give me a $10,000 retainer and I'm going to bill you, $625 an hour. against that, and I'll probably use the whole $10,000 retainer before things are done. Does it really make sense to fight this or not? Instead, most of the time they just come to us and say, you know, what can your client pay? Let's just reach a practical solution. And it's generally very, very favorable to the bankruptcy filer. All right, so I'm going to leave some time for Q&A because I've seen several questions coming in, and I would love to answer some questions. So Lisa, do you want to fire those at me, or do you want me to read?
Well, actually, you were so clear and concise that everybody understood perfectly. So we don't have that many questions. Although Ron was asking, you know, on these types of cases, how would one get paid? Because, you know, if you've got someone that's got a hardship and they're paycheck to paycheck.
Yeah. Yes, that's the conundrum, Ron. So I know there are some people on here that are not attorneys, and there are some people on here that are attorneys. So let me answer this question kind of from a just general standpoint, instead of getting too much into the details of what I would get into if I were just talking directly with another attorney. And by the way, you have my contact information in the slides. You're welcome to email me and we can chat on the phone. I'm very open to just having conversations about this, sharing how we do it, giving even more detail. But you're exactly right, Ronald, to where the best cases are the ones that the people that would have the hardest time paying legal fees. That's the conundrum. That's this catch-22 that we're in. Is we see a case, particularly where we believe we will have to try to fight and prove undue hardship. Historically, a federal student loan, right? Maybe this will get better in the future, but historically, we had to be able to prove undue hardship, or at least have a very good case of undue hardship to negotiate a deal on a federal student loan. So we're meeting with the client. They have a great case of undue hardship. Maybe there's a disability, there's a lack of employment, there's, you know, medical issues in the family, there's all kinds of things. Well, I can't even afford to pay any legal fees, right? And let alone a small monthly payment. Those are the best cases, but the hardest ones for us to take, because we ultimately do have to pay my staff and pay my rent and all these things, right? So what we started doing about a year ago, just from a high level, monthly payments, try to keep them really affordable, under $300, sometimes under $200. And we just have the client start paying as soon as we start working. And we don't determine a final fee because we base the final fee on the amount of savings instead of on an hourly rate, right? Instead of billing an hourly rate of $4.75 an hour, I'm just saying the better result I get you, the higher your fee will be. It's actually a very small percentage. It ranges from about 10% to about 18% of what we save. And we just have them start paying until we negotiate a settlement, or we win the case, or the case defaults, whatever it might be. Then we calculate a fee, and they keep paying that small monthly payment till the fees are paid. Some people might pay that payment for 3 or 4 or 5 years if their fee ends up being slightly higher because their loan was higher, and their benefit was bigger. But if we get no benefit, if we totally lose, which hasn't happened yet, but if we totally lose, we'll refund what they've paid to date. It's fully contingent on some savings. Okay, so, and yeah, Karen Bentley, who's getting a reputation out there, deservedly so, is the attorney that handles primarily the student loan litigation and the VDRs here. So if you come across her, or if you're in of court, she's in the in of court this year, and you're welcome to chat with her and get to know her. She's amazing. She's awesome. So
we got a question about signatures on the PSLF application. Did you see that one?
The one that just came in from Tanetta? I don't know the answer to that, Tanetta.
I don't either.
But I would guess it's in the instructions. That's where I would go if I were trying to research an answer. Is I would go right into the instructions for the application, because my guess, I don't know this for sure, but my guess is it would answer that question in the instructions.
And most people have scans. I mean, I think that if it didn't answer it, I would get my employer to sign it, scan it to me, and get that in, and then, get the wet signature later.
Yeah. So we're in Q&A, so let me just show that slide, but I wanted to make sure we also get the disclaimer up there. I know ACBC wants to make sure that this is in the recording and that you all see that it's that there's a disclaimer here. So we're lawyers, you know, we're always gonna have a disclaimer,
right.
so we disclaim everything.
So I think did I just cut you off, or were you finished?
No.
So, and I think I speak for Ken on this, is like, we are all about people getting accurate information and getting notice so that we don't have to tell people like, hey, you missed the boat. And I think it just happens from all of us talking to the people that we know. And like, I've been like a parrot. Do you have student loans? Do you have student loans? Or do you know anyone that has student loans? If you don't want to tell me you have student loans, right? And because I just don't want to be in a situation where someone says, you never told me, and you had this thing happen, or you knew about it, and can tell your story that happened yesterday.
Yeah, I will, since we have two minutes left. So I was getting my hair cut last night. That's why Lisa cracked the joke about my hairdresser at the top of the clee. Getting my hair cut so I could look professional today. And she asked me what I did for a living, and I said I have a law firm. And she said, what type of law? And I said bankruptcy. And she said, oh, I did bankruptcy several years ago, but I kind of feel like I didn't get a fresh start, not the fresh start I wanted. And I said, really, why is that? And she said, because I still have $21,000 in student loans, and I haven't been able to pay them for 8 years. And it's been it just feels like it's holding me back, right? And this is what we've heard. This is why Joe Biden made this promise on the campaign trail, was because this was the story. It's holding me back. It's holding these young people back from starting families, buying homes, things like that. And so I started asking her some questions, right? My ears perked up. I said, where did you go to school? Did you fill out a FAFSA? Was it a federal loan? Yes, it was. Did you get Pell Grants? What are those? Are those like the gift money that I got in addition to my student loans? Yeah. And I just confirmed that these were Department of Education student loans, because I didn't want to make her make her night and then have her be disappointed later. Asked enough questions to confirm that these were U.S. Department of Education held student loans and that she did get a Pell Grant. And I said, well, I'm going to make your night. Well, and then I asked her, I said, have you heard about the Biden-Harris student loan forgiveness program from a couple of weeks ago that was announced a couple of weeks ago? And she said, no, I haven't heard anything about that. So I said, well, I'm about to make your night, because in a month or two, your student loans are going to go from 21,000 to 1,000. And man, she was so excited. She should have given me, I should have told her,
free haircut.
I get a free haircut, right? For just, for making your night. But it's exciting to be able to share that news with people, that not everyone has been paying attention to this, to the news, and they don't know about this. And a lot of people might miss the boat if they have FFEL loans, and all they need to do is a consolidation first, and then they'll qualify. So that's why you should be telling everybody, friends, family, just make sure you're talking about this to people, even if you're not sure if they have student loans. Probably more people have student loans than you think, right? Lisa and I were talking about this before the program. Like, there's just a lot more people out there with student loans at an older age than you might even consider. So
yeah, and also with a lot of folks, we see either the Parent Plus loans, and if you're getting loans for your children, those are Parent Plus loans. They say Direct Plus, but they are Parent Plus loans, and so you're seeing a lot of that. And so, we're hoping that the new IDR program might help with those, because right now, Parent Plus loans, you are only eligible for the income contingent repayment program, which is the worst one of the repayment programs. It's ICR. But maybe the new repayment plan next year will help. But again, it's based on your income, right? So, payments can be as low as 0 if you're not working. We actually have a client right now who's grouchy about his payments because he's making 30 grand a month. And so I knew how to fix it for him. I just told him to quit his job, but he didn't want to do that. So it is based on your income. So Crystal, you want to close it out?
Things up. Thanks, everybody. It was a pleasure being able to.
Thank you all for coming
today.
And most importantly, thank you, Ken and Lisa. I know you put a lot of hard work and effort into this, and we'll look forward to having the video posted, as Lisa mentioned, to the ACBC website, as well as on Ken and Lisa's website. So if you know anyone that could put this information to good use, and I think all of us do, then we encourage you to share the link for this video.